All right, good morning, ladies and gentlemen. Hope you are doing fine. And we are also moving. This is the Royalq opportunity. Today is the 3rd of August 2022. Today I'm not going to talk about the network building, but specifically finish up my third video about trading. And basically, I just wanted to pass by this side and just give you confidence that the opportunity is still really paying very, very good. Like you see consistent results on 28th, 29th, 30th, 31st, 1st, 2nd, and 3rd. So the business is really producing by the different three ways, from the activation bonuses to the direct quantifications, just a little bit. And the team quantification is really also producing very, very good. You see $65, 109, 107, 317, 53, 51, and today we're already in $11. It means people are making money. And so, like I usually say, there are basically two main ways for you making money. You can be a cycle trader, or you can be a one-shot. So before we shall go so much into the cycle, which is one of our topics today being a Wednesday, let me break it down still on how to read the indicators, because that's one of the important subjects we have been able to categorize and to have as a team. All right, okay. Right, so that I'll be able to update this later. Let me go to the subject for today. Basically and purely, we have gone through our series. We looked at how to add in the coins to create your watch list. We also were able to go an extra mile and look through putting in indicators like the TSI, that is the True Strength Index, that shows us the strength of the market. Then we are able to have the indicators like the T3 ribbon, and such indicators have been very, very paramount to ensure that people are really making it big, because with the T3 ribbon, it has the entry and the exit arrows, the green one pointing when to enter the market and the red one pointing when to get out of the market. We're also able to look at the candles, and we said that the candles, we have the hashing ash candles, and these really could really help us so much in seeing when to get into the market and when to get out of a particular market. And so we were able to look at those details. So today we shall look at an important, very, very important aspect, and this aspect we shall ignore all other indicators and put our focus on one indicator. So we shall not get back the TSI nor the T3 ribbon, because you see this is the T3 ribbon. Like here, it was showing you when to enter the market, right? Let me just take a screenshot. Right, you can see very clearly that here, that is the entry. It was telling you enter the market, and basically you can see that's the same area where the blue line crossed over the red line in the TSI indicator to show you when to join the market. And if you had joined from here, if we look at the basics, if you had joined from there, if we could measure how much profit you would have made, okay, this morning, today, if you are using our indicators, okay, let me just pick it up from there. All right, you so far have made your 3.3%. Remember, we said that if you have good capital and you pick up your trade, you will basically find that you will use your capital and stay shorter in the market, and that's very, very important. For example, okay, let me say I have if I have for example $1,000, and this is the capital, not the total, but this is the money I want to use specifically for this trade. If I take off 3%, that is $30, and I'll be out of the market. So the higher the equity, the shorter time you stay in the market. the lower the equity, the longer time you stay in the market. So I would encourage you to focus on a main thing of making sure that we develop enough capital so that we can stay shorter in the market, trade several trades, especially the solo traders, and be able to win big, right? I hope that point has been able to receive home. So today, I'll basically get off all the indicators. Remember, we said that before you get off any indicator, it is very, very important for you to save, all right? So make sure that your work is saved. So I'll tap there, then scroll down, right, mine is already saved, cancel up, and now I will get off all the indicators, and I'll focus on one main indicator today, right? So I'll get off all the indicators, and okay, I'll get off also this volume analysis indicator. All right, so let us focus on one indicator today, and the indicator we are going to focus on, this indicator is called the auto Fibonacci retracement indicator. The auto Fibonacci retracement indicator is one of the sweet indicators that we can have in the market. And so to have it, our first step is to go to the plus sign. That's the first area, right? We got the plus sign, and we tap on plus. Remember specifically, all right, sorry for that. Remember specifically, if we tap on the plus sign, which I've indicated here, you got the plus sign, right? Then after plus, you find that we need now to go to this area we call the FX indicators, all right? We go to this area we call the FX indicators. And so when you reach the FX indicators, we basically tap on FX indicator, and this drastically and purely takes us to, okay, I don't know whether it's network, it takes us to here. Now once we reach here, we now needed to be able to understand that we shall go to technicals. We shall tap on technicals, and we shall type in the word auto. Make sure it is auto FBI retracement, and you can be able to see it very clearly here. It is this indicator, all right? It's that indicator. Okay, now we tap on it once, we tap on the star, tap on it once, and it will basically appear into our screen. And so when you tap more than twice, you see now this screen has two same indicators, right? So you can see these indicators are the same, this one and this one. So I need to remove one so that I use one, right? So I'll tap on it, then tap on the X, then it will disappear. All right, so now that we have the indicator in, before we use it, let us set it up. What are the proper settings for this indicator? So basically, before I get you here, the first step is to come to the indicator itself. There, on that is the settings, all right? And then I tap on settings. Let us look through the indicator, and what should we look at? The first thing we need to look at, ladies and gentlemen, about our indicator is this area where you see percentage and right. So it comes with values, so we need to choose percent. It comes with left, we need to choose right, right? So let me show you that. So it comes with values, we tap on percent. It comes with the left, we tap on right. That's the first thing we need to do. All right, let's still go into the input. Now on the input, I want you to look very specific and see what is being ticked here so that you can have the right results. Okay, you see on 0, it's ticked here and here. Where there is 0.38, it's ticked here and here. Where there is 0.618 is only ticked here. Where there is 0.76, it's ticked here and here. All right, so that's the first step. So we cancel that, then we continue from there. Now once we come here, you can see very clearly, very clearly, Where there is 1.272, it is ticked only there. Where there is 1.168 is ticked only there. Where there is 2.618 ticked only there. Where there is 3.68 ticked only there. Where there is 4.232, it's only ticked there. All right, I hope you can be able to get that. Now let's continue to the last part. On the last part, we can be able to see very clearly, ladies and gentlemen, that we can be able to see very clearly from here. We have 4.236. Then we can see negative 0.26 ticked left and right, and then we can see this area, which is negative 0.618 ticked to one side, right? Now we need to note that, and you can now save as default and then press OK. But basically, here you see from the down one, the second one is ticked twice. Then we go through, then we go to 0.7, that's the one that ticked twice. Then we have 0.382 ticked twice. Now we tap OK, and our indicator will basically tap into once the screen. So our indicator will basically be looking like this, right? Now, I want us to first get some few important aspects clear. So there are some few important aspects, important aspects, like the what I'm saying, that we need to first look at. All right, we need to first look at. All right, and so some few important aspects that we need to look at. All right, okay, especially now in a screen like this. Okay, all right, all right, all right. Okay, some few extra important things we need to look at. Now, once you look at the trend, once you look at the candles, you need to look at the trend of the market. That's also very important, by the way, because you cannot just trade. You cannot just trade. It's important also to look at the trend. Now, Julius, what do you mean? Okay, clearly this is within the 1 hour. You see the market came like this, from up, it came down, then it went up, then it came down, then it went up. Now this is what we call the market forming a double bottom. All right, so if you come to an area where you see the market has touched this area like this twice, definitely you know that the market will now take an upward movement. That is simple, it's understandable. So look at the trend. The market came down, right? Beautiful. Then the market comes down again, it touches the area. Now definitely we know that the market will take an up. So this helps you to prepare when to trade. That was just a by the way. Now let's get back to the subject. All right, now I want you to note some few important things we need to look at. There is a dotted line. There's a diagonal dotted line in the auto FBI retracement, and this is the diagonal, this one. You see it very clearly, this dotted line. You see this dotted line, this one, this dotted line. All right, look at it very clearly. It's an important line. Sometimes it's moving from 0 to 100, or sometimes moving from 100, which is on top, and 0 is down. All right, before I continue, I need to first make sure I give a proper definition of what this means. Okay, in this trade that we have here, you can see 100 is down and 0 is on top. It means that the previous trade, I need to make it clear, the previous trend, sorry for that. This means that the previous trend was a downward trend, like you see. So because you see that 0 is on top, in the 1 hour time frame and 100 is down. So it means that this trade, this shows you that the previous trend was a downward trend. Downward trend. So although this market is getting up, but it shows very clearly that this was a downward trend. The market just changed up. But what happens? It doesn't matter whether 0 is on top or 100 is down. Once you find this dotted line down here, just know that the market will effectively pick up from here and take an upward movement. It will pick up from there and take an upward movement. And if it doesn't do that, ladies and gentlemen, then if it breaks through these lines and it gets down, then that's where your margin calls get into play. If you are using your robot, that's when now your margin calls get into play. Right now you are sure that if it breaks the 100 line and it tries to come down, then you will set your margin calls. So you will set a preset so that it buys again on a preset price. It buys on line 127, 100, 161, 261, 361 or 400. So you understand that you have 1, 2, 3, 4, 5 margin calls that you open up, specific, straight to the point. So let me change from 1 hour and let me go to the 4 hours time frame. So now look, ladies and gentlemen, this shows that this trend is going to be an upward trend, right? It shows that this trend is going to be an upward trend because 0 is down and 100 is on top. It means the previous trend was a downward trend. Now 0 is down and 100 is on top. I usually encourage a 4 hour time frame or 1 hour time frame to be able to have the results that we need from the business. And so since 0 is down and 100 is on top, ladies and gentlemen, it's us to understand that you're going to have now an upward trend. An upward trend. So we are going to have an upward trend because 0 is down and 100 is on top. And so if you came to the 4 hours time frame, ladies and gentlemen, and you specifically found this trade on 0 here, right, on 0 here, without requesting for anyone, without looking for any indicator, it says please get in, pick the trade. So imagine you had picked the trade from here. Let me bring my price ranger. Okay, you came on this trade and found it on 0 like this because when the market gets down, that's the sweetest time. So you wait on 0. As we speak right now, you already have made your 5.5%. Now the person may say, Julius, what about now? Can I get into the market? Now you need to wait. If you didn't join from the 0 line, now you need to wait. What do I mean when I say you need to wait? Now we use these lines as support and resistance. So now we need to wait for the next candle. If the current candle closes above the line and the next candle tests from the line going up, then we shall be able to enter the market. And specifically we can see from 23, right? I said it depends on your capital or your equity you're using to trade. Then we shall wait for the next candle to see how it is formed. But if it's formed above the line, now it means 23 is the new support. And now we shall be looking for the new resistance, which could be 38. We could stop here. It could be the new resistance. It means the market will get up to there. That's 2%. Or we can still keep going, ladies and gentlemen, at 38 at 3.7, or we can break through to up to 61. This is 61 line here, which is 8%. Or we can go up to this is the 78. 61 is here. We can go up to here, which is the sixth one, or we can go up to the 78 line, which is the sure deal. So if this candle forms, we can be able to take off 8%. But if I have good capital, I don't need to stay longer in the market. I said the higher the equity, the shorter time you stay in the market. The higher the equity, the shorter time you stay in the market. And so you need to treat this line like a golden area, the magic of the market. Now, someone said, Julius, what if the market changes? Now, look, ladies and gentlemen, I said we use these lines as support and resistance. Now, once the market changes, ladies and gentlemen, right? Once the market changes, if the market changes, ladies and gentlemen, if the market changes, and like you see very clearly here, it doesn't go up. Now, I'll set my preset again. This is when we now bring in how to set the preset prices. I'll now come and preset on zero line. I'll now come and preset on the zero line. And I say if it has broken down, the market has refused to continue up, now I'll set my preset at what? At zero line. If it breaks again, I'll set my preset margin call buy on the 23. If it breaks again, I'll set my preset margin call on 38. If it breaks down, I'll set my preset margin call on 61. Ladies and gentlemen, when the market hits the 61 on the Fibonacci, then you have a sure deal. Then you'll have a sure deal. If it touches the 61 margin, then you have a sure deal that the market will do boom like this. Maybe you may be saying, but Julius, are you serious? Once it does that, it is a boom? All right, let's go into the history. I'll look through one single coin here, and this coin is called ETC, right? ETC USDT. That's how I'll look through this coin, right? Let us look at the history. How, when I talk about when the market hits the 61 line, right? Look at someone came on this trade when some of you maybe were sleeping, right? Okay, so I'll use, let me go into the history, because if we try to look backward, you see the market did this. Okay, let's go into the history when the market touches the 61 line, all right? So I will play the bar plays, all right? Okay, it's not around, but all right, I just want to show you the market came and touched the 61 line in the previous trade we have had. And it was here basically, right? It was here, and it was this month specifically, and the market touched the 61 bar. When the market touches the 61 bar, it is a sure deal. So if the market breaks through, like for example in this area, let me just clear my space so that I show you. So if you are using 23 as the support now, the market has failed to break through and it comes down, then I'll put my preset price. That's how we develop the preset prices. We use these percentages to detect the preset. So I will put my preset on 0. If it breaks through, I'll have my preset on 23. If it breaks through, I have my preset on 38. If it breaks through, I have my preset on 61. So only 3 margin calls, straight 3 margin calls, not having many. So basically and purely, if it touches this line, I have a sure deal that the market would boom, boom, boom. Now let us see in the past, because we use the history of the market to know what the future has for us. Let us look, ladies and gentlemen. I want you to see that the market did this on the 22nd, and it touched the 61 line, and from here the market was able to perfectly and purely move up, and this market was able to deliver over 88. No, not that only. Not that only. Not that only. All right. Okay, let me delete and measure again. The price range. Right, let's start from here again. All right, let's see. It touched the 61 line, and basically the market was able to deliver over 92%. Now the market has gone down. It has given you a second chance again. It has given you a second chance again. And you see the second chance it has given, the market touched the 0 line. And if you came on the 4 hours time frame and you have the auto Fibonacci into your straight, you found it here on 0. As we speak right now, since morning, you have already collected your 20%. So if you find it on 0 or on 100, but when you find it on 0, you understand that, ladies and gentlemen, we are now onto an upward trend. So if you found it on 0, now basically and purely, you would have taken your 20% today as we speak, ladies and gentlemen. As we speak, ladies and gentlemen. So basically and purely, this is how powerful this opportunity is. This is how powerful. So if the market breaks the 23 line and comes down here, then I will put my preset on 0 and wait the market to touch this. Once it breaks down, then I'll put my preset here. Once it comes down, then I'll put my preset here. Once it comes down, I put my preset here. And once it buys here, I'm sure that the market will go up. So these lines, we use them as support and resistance. I could pick another coin, another trade. Let me pick one of the trades that people love, that is causing now them into floating. This is BTCST. All right, beautiful. Do you know BTCST in the 4 hours time frame is on the 0 line? Is on the 0 line. So if you are not trading this particular trade, I will set my preset. And now if it breaks through that line, ladies and gentlemen, like you see, these candles are the hashing ash candles. Like you see, those that have been attending our trainings, if we find a candle that has a wick on top and a wick on the bottom, then the next candle is flat at the bottom, but with a wick down, it means this market is still going down. So I will put my preset on the 23 line here. And I wait to see, I'll check it up and see if it breaks through the 0 and it forms the next candle in the next 2 hours. It breaks, the candle closes below the line and it opens another candle below the line. Then my preset will be here on the 23 line area. Then if it also breaks, then it will go to the 38. Then if it also breaks, then it will go to the 61. Then I'm sure that if it touches the 61, boom, the market will do. Let us check in the past. This trade, ladies and gentlemen, went even at the 61 line. If you can see it very clearly here. And surely, the market later went up, ladies and gentlemen, and we can see that this particular trade delivered over 288%. The chance is here again for you. And that's how we use these lines to set our preset prices. So I can put at 0 and wait, but if the market still goes down, still, if you can see very, very clearly in this area here, it has 1 hour and 59 minutes. So I will wait. So I will see how will the next candle be. If it still breaks down, then my preset will be here. It still breaks down, my preset will be here. It still breaks down, my preset will be here. A preset price. And so I would encourage that if you want to set a current preset price, you need to change your candles, all right, from the hashing ash candles back to the traditional candles. So we shall tap there. Then go to the chart type and return to what we call the normal candles. And these are the normal candles. So I'll tap on the normal candles so that I can get the current price. You see, it is breaking down, so I'll wait. So I'll have my preset on the 23 line because it has broken the upper line. So since it has broken the upper line, ladies and gentlemen, it means now this will be the new. So I will preset from here. And if it breaks this one, then I will preset from here. If it breaks this one, then I will preset from here. And that's how you trade. Instead of you chasing the market, you wait for the market to come into your hands, ladies and gentlemen, then boom, take up some good profit. So when the market is getting down, this is the most exciting hours. Let's look at other trades like GST. All right. Now we use these as support and resistance. All right. Okay. Now we still have 1 hour in the 4 hours time frame. So if I want to pick up this trade, all right, for example, Okay, this is very clear. I usually don't want to consider the 50 line. So if you look at this trade, it tested the 38 line, it broke through, then I would enter this trade for those that love trading. So this would be the new support. Then I would target the take off my percentage in the new resistance. I don't know whether it will make sense for you. It breaks here, then I'll enter from here. I'm sure that the market will go up to the upper line, and I would put my take profit as 3%. Then I'll be patient to see how this next candle will form. If it breaks through, then I will enter the market. If it breaks through if the second candle breaks through, then I will enter the market again, and I know it will go up to the 0 line here, and I will take another 5%. So that's how we use these lines as support and resistance, support and resistance, support and resistance. So they create a new support, a new resistance, we take our profit. New support, new resistance, we take our profit. Thank you so much for spending your 30 minutes to learn about the auto Fibonacci retracement, one of the amazing, mind-blowing indicator you need to have in your trading view. Use it particularly and particularly to be able to make yourself good profits in a day. Thank you so much. You need to join our amazing team, Team Eagles International. We are the fastest growing team. You just need to get back the person who sent you this video, get into our trainings, get into our tutorials. Let us help you one-on-one. You can also comment into the chat of this video what you need to know more, and we shall come back to you with the right feedback. You can also get into our Telegram group, Team Eagles International. You can also look for our Facebook group, Team Eagles International, and you can also be part of our WhatsApp groups, all right? Billionaires 1, Billionaires 2, Billionaires 3, and also our Team Eagles. So get back to our leaders. Let us help you travel with you this journey of financial freedom, because we have tested, we have proven to have one of the best systems you can use automatically with your robot to make it big, better, and bolder. So welcome to our team, and big up as we see you make more money, make more profit, and become financially free. Remember, the robot trades in your Binance, Hobby, and Coinbase without you giving your money to anyone. This is time to say no to scams. This is time to say no to giving people to your money to trade for you. Let the robot trade for you.